Welcome back. Hope you're having a good morning. It's a big weekend that's coming up. For starters, the GIFT Nifty is suggesting that we're likely to open up with a gain of close to around 50 points or thereabouts. So important to build on from there. But plenty of stock to discuss. Siddhartha Khemka, the head retail research at Motilal Oswal Financial Services, joins us on the show. Hi, Sid. Good morning and good to see you. And, just scrolling through. And in fact, the election is so big this time around. A couple of cinema halls, they're screening it as well. So that's the kind of excitement ahead of this verdict. But let's discuss a couple of stocks then, Sid. Yesterday, the biggest loser was Tata Steel. What the street seems to not be liking is that the debt will continue to remain at elevated levels because in India, they are doing some capex. And the problem is maybe some good money is chasing the bad money. That is with regard, to the UK asset. So that's why I think they're a little bit skittish. What's your view? The stock was down close to 6% in yesterday's trade, closer to around 165 rupees.
Nigel, good morning. Good to be on the show. So if you look at Tata Steel numbers, I think the numbers on their own were two parts. A, better than expectations, but on their own, still a bit weak. The good part, at least on some accounts, was the guidance that the next 2 quarters could see improvement in volumes as well as realizations and costs, especially on the coking coal side, which is kind of coming down and leading to improvement in the margin. So overall, I think the India business has posted a decent performance. Domestic demand momentum is expected to continue. And the Tata Europe operations has seen a sharp reduction in the losses. And what the company has guided is that it expects the European operations, the Netherlands operations to start reporting a positive EBITDA from Q1 and the UK to report positive EBITDA from Q3 of FY25, which is a big change that will happen in FY25. So I think that is something which is positive take on from the results. The company is also on track to increase its steel capacity to 40 MT, which is again kind of positive given that improving demand scenario. What is happening is that I think, yes, debt is something that is still bothering the market. The fundraise is again kind of taken a bit negative. And again, the valuations, I think the current price, the stock is trading at more than 7 times EV/EBITDA. And we believe that it is adequately priced because the improvements are not such strong to further improve or increase the valuations from here on. So we kind of have a neutral rating on Tata Steel with a target of 160.
Okay, neutral rating on Tata Steel with a target of 160. Got that. Siddharth, hi, good morning, and thanks for joining in. The auto sales for the month of May are going to be going to be released tomorrow, right, on the 1st of June. We have a lot of stocks in focus, of course, but the one I want to ask you about is Ashok Leyland, because the company post its numbers, post the last month's sales, has been seeing a recovery in commercial vehicle sales. The management commentary is very positive, and the expectation is that there'll be double-digit growth in numbers this time. Is the risk-reward favorable for a stock like Ashok Leyland?
I think, yes, within the auto pack, if you look at something like an Ashok Leyland, the risk-reward definitely is favorable. While on the overall monthly volumes, that the numbers that will come up from next week, we are not expecting a very strong number. Numbers are expected to remain soft, especially if you look at from the CV side. The MHCV numbers and the LCVs are expected to decline about. So MHCVs should decline about 8 to 10%. LCV, we are expecting a decline of about 2 to 3%. And if you look at the key segments, the iron ore, cement sector, infrastructure have led to a slower growth in the CV segment. However, we believe that post the elections, we would see again improvement in the activity in both in infrastructure, in a lot of these other activities, which should improve demand for CVs. Also, we are witnessing that monsoon is likely to be pretty good, and that should also lead to improvement in demand for sectors like tractors and two-wheelers. And within the overall auto pack, as I said, two-wheelers, Hero Moto is something that we like, where the risk reward is much favorable. The stock is trading at a significant discount to Bajaj Auto. Similarly, for Ashok Leyland, the valuations are much comfortable compared to a Tata Motors, and growth in the core business plus the several EVs launches that they have done, that should also lead to a good demand growth in the overall numbers. So we definitely have a positive view on Ashok Leyland. We have a target price of 240. and a buy rating.
You know, banks, Sid, hi, morning, Prashant here. Banks were the saving grace in that sense, right? I mean, the market would have been down easy 300 if banks were also down yesterday. But the top 4-5 banks were all up, varying degrees, but nothing very large. Do you think post the sort of election results, because maybe they're not done anything at all, large private banks for a while, valuations are reasonable as compared to other sectors, action may coalesce around this SPAC? What's your sense?
Yeah, Prashant, I think, yes, if you look at the overall quarterly season as well, banks, the earnings growth from private banks have remained healthy. Advances growth has been in the range of 3 to 5% on a sequential basis for most banks, and this has been fueled by growth across retail and MSME segments. We have seen a big focus on the deposits, and hence banks are paying more attention to the liabilities, and consequently the deposit growth is expected to be a little more see improvement, and CASA mix also improving for FY25. Asset quality continues to remain healthy. Within that, some of the PSU banks, especially SBI, which has come out with very strong numbers, and compared to some of the other smaller PSU banks where the guidance is kind of a little bit muted. So I think within the overall banking space, ICICI, Axis, and SBI, these would be our three preferred picks. If you look at even SBI, we have a target price of 925, and we expect a healthy credit growth of about 13 to 15% for SBI, which is a leader in the pack. Valuations continues to remain comfortable, and that is something which could support the market going forward.
Siddharth, another stock I wanted to ask you about, actually two stocks, was the battery makers, right? Amara Raja and Exide. Amara Raja actually had a conference call yesterday at 4 p.m. and the commentary was very bullish from the management. A lot of their segments are doing well, but the stocks have rallied quite a bit. At this point, does it still make sense to buy any of the battery makers?
Yeah, I think, yes, the excitement with regards to the EV batteries that these guys are making. So if you look at Exide, they have got a good contract with the Hyundai and Kia. For that, they are also putting up a large factory. They have earmarked almost 5,000 crores for the lithium iron manufacturing project, and of which the first part would be about 1,000 crores in FY25. So I think, yes, there, if you look at the longer term picture, this the next phase of growth will be driven by these new initiatives, both for Exide as well as for Amara Raja. But having looked at the current run-up, I think the upside could be little less. The stock price movement could be more sentimental driven. But in terms of valuation comfort, we just need to see when and how these projects get implemented, and from when we could start getting the revenues and profitability from these new projects. So until then, yes, the view remains positive, but purely in terms of valuation, one needs to be a little more watchful.
Okay, all right. Sid, very quickly, if you could tell us about Sunteck Realty as well. That stock in pre-open has opened higher post its numbers, but it's been one of the biggest underperformers actually in the real estate space in the recent past. Your view?
Yeah, so Nigel, if you look at in the overall real estate pack, Sunteck had been an underperformer. This is largely because they had been focusing a lot on the premium and ultra luxury segment, and that is where finally the growth is coming, and we see that the luxury offering and the execution has now picked up across segments. Now the real estate pack, we have seen how the pre-sales numbers have been on a record tear, and if you look at for Sunteck as well, the pre-sales for Q4 was up 26% at 6.8 billion rupees. This is almost 30% higher than our expectation, and for the full year FY24, it has almost achieved its guidance of 20 billion rupees of around 2,000 crores of the pre-sales, and we believe that FY25, the numbers could now see improvement with a lot of these projects being completion. That will lead to improvement in the P&L, and that should drive the stock price going forward. So overall, I think we continue to be very positive on Sunteck. We have a target price of 640, and we expect a healthy 25% pre-sales CAGR over the next 2 years, fueled by the ramp up in the launches, the strong balance sheet, and the improvement in the execution and delivery of the projects.
Okay. All right. Thanks a lot, Siddharth, for joining in fact, giving us your view on a whole host of stocks. Wishing you a good Friday ahead.